G. Shivakumar, the Executive Director and CFO at GE Shipping, who are joining us on the show. Mr. Shivakumar, thank you so much for your time. Let's talk about a whole lot of topics under the shipping space right now. You have freight costs that are in focus. You have tanker demand, and of course, any update on the Russia-Ukraine front would also have an impact on the shipping industry. So let's get started, and let's first talk about what happens now that the Russia-Ukraine ceasefire talks are underway. How is this going to be impacting tanker demand overall?
Yeah, morning and thanks for having me. The headline news is if we have a peace deal and trade patterns go back to where they were before the war, it's a negative for tanker rates because the war has been a boost for ton-mile demand, which led to a tightness in the tanker markets. That's the headline news. However, while there is talk of a peace deal, just over the weekend we have had two tankers attacked in the Red Sea carrying Russian oil. And it doesn't seem that the peace deal is progressing very quickly because this is an escalation rather than a de-escalation. But if the peace deal happens, it's a negative for tanker freight rates upfront, which for us would be a good thing because we are waiting with significant amount of cash to invest at the next market downturn.
Let's try to understand the impact of both these cases on freight rates. If at all were a peace deal, if a peace deal were to go through, how much will freight costs come down by? And if it remains status quo, then do you expect freight costs to sustain at these levels?
Yeah, first of all, the status quo, let's understand what it is. We are in the middle of a very high crude tanker market just for the last couple of months. So for the very large crude carriers, which is the VLCCs and the Suezmaxes, rates have been exceptionally high. The VLCCs are earning more than $100,000 a day. The Suezmaxes are earning $60,000 to $80,000 a day. So there has been actually a tightening in the last couple of months because of the sanctions on the two major Russian oil companies, which were announced sometime in October or so. So the markets have actually gone up in the last couple of months. For perspective on what impact a peace deal could have, as I said, if you just go back to the trade patterns that we had in end of 21, early 22, before the war started, a crude tanker of this kind would probably earning about $10,000 to $15,000 a day. And over the last 3 years, a Suezmax crude tanker, which is the largest crude tanker that we operate, has probably averaged over $40,000 a day. And keep in mind that the costs are fixed. So the $30,000 or $25,000 to $30,000 incremental goes straight to the bottom line. So that's what could happen. And again, we are not, this is not a forecast, but this is just for perspective on what the impact of the war was. And the way it is, we don't believe that it will go back to exactly what it was before, because then you need Europe to go back to importing most of their oil from Russia, which may not really be a very practical approach for them.
Okay, and Mr. Shivakumar, now that you've put this impact to perspective in terms of numbers, if you could also quantify for our viewers the impact that it is going to have on your company?
Again, I want to clarify, I'm not making a forecast. I'm just saying that so we run about 22 tankers, actually, crude and product tankers. The impact on those, and that's if you just take them on a number of operating days, that's between 7,500 and 8,000 operating days. And if you take on average $15,000 per operating day, we're talking of $120 million going off from the top line and the bottom line. Again, I want to clarify, this is not a forecast. This is just to enable you to put some numbers. And it's easy to go back and see what our profitability was in FY22 before this started and what our profitability is currently.
Understood. So that's as far as the impact of geopolitical concerns and its impact on not only the business but the entire shipping industry is concerned. But let's shift focus now to government's policy support. How do you view India's renewed focus on shipbuilding and a full maritime ecosystem? And given the investment and the development fund that the government has set up, are you now looking to diversify across other segments as well?
Yeah, we welcome the government's focus on the maritime sector. We think it's something that is sorely needed for an economy as large as India's, with so much foreign trade, maritime foreign trade. So we welcome that. So far, what we've seen is incentives to shipbuilding, not so much for ship owning or operating. We will await those incentives. We are not looking to change much of what we are doing. We, of course, don't believe that we should be in shipbuilding. We are in the ship owning and operating business, and we will stick to those activities.
Okay, and lastly, if you could help us understand, given there is so much volatility in the shipping cycle, if you could share with us your capital allocation framework for the second half and FY27?
Yeah, you're right about the volatility, and it's especially higher so for us because we have about 80% of our capacity operating on the spot market. So, not on fixed rate contracts. These contracts are up for pricing about once a month on average. So, our plan is to wait for the prices that we would like. Unfortunately, because the markets have been so strong, prices have been very high over the last 2 to 3 years. We are only doing very limited investments in modernization. So, where some ships are getting too old for us to run internationally with our customers, we are selling off those ships and replacing them with similar ships which are younger and which can trade and which are acceptable to our customers. So we are not increasing the number of units in our fleet till we get the right prices. So that's our approach towards capital allocation. We have also increased our dividend payout ratio slightly between last year and this year.
So you're not increasing the fleet size at the moment and you're expecting the dust to settle and prices to normalize. Mr. Shivakumar, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the geopolitical landscape is looking like and what the impact will be on domestic shipping industry. Thanks so much for joining us today.